The TFRA, Tax-Free Retirement Account. Why hasn't my financial advisor ever told me about this? Reason 1. Most financial advisors don't know that an account like this exists, nor do they know how to set it up to be legally tax-free for the account holder. Reason 2. Most financial advisors recommend financial vehicles that the company they've contracted with tells them to recommend. As a result, less than 0.07% of Americans have what we call a TFRA account set up, while more than half the population has a taxable 401k or similar tax-deferred retirement account. With a tax-deferred 401k or IRA, you have to pay taxes, upfront or at the end. Either way, you will be taxed heavily. Your money is not liquid. You can't access your money anytime you want, and if you do, you're fiscally penalized. You are limited to how much you invest. Plans with most tax benefits have funding limits. Your money is not guaranteed. The money in your 401k or IRA soars with the market and goes down with the market. You are required to report your earnings to the IRS. Everything in a 401k or IRA is Uncle Sam's business. With a tax-free TFRA account, you don't pay taxes on growth or principal, ever. This is 100% legal if your TFRA account is set up correctly and structured according to current IRS tax code. Your loved ones are permanently protected from your final expenses with our program. You earn 30 to 40 times more interest than with a regular bank account. Historically, qualified individuals earn 2 to 7% a year. Your interest rate is guaranteed. Your money grows at the same yearly rate as when you opened your account, even if the market crashes. Your money is liquid. All money put into and made in your account is cash. You can withdraw any amount, at any time, without penalty. You are not required to report earnings to the IRS. The IRS doesn't classify income as income inside this kind of account. Not Uncle Sam's business. And there are many more wonderful fiscal things you can do with an account like this. But, is it too good to be true, you ask? Nope, it's very real. In fact, an account like a TFRA is not a new investment strategy. Accounts like these have been used by wealthy individuals and families for over 100 years to build, then pass on fortunes in a legally tax-free environment. President John F. Kennedy had an account like this. So did Presidents Taft, Cleveland, McKinley, Harding, and FDR. FDR, in fact, held a large portion of his estate, $562,142, or over $7 million in today's dollars, inside his account. Even John McCain used his account to fund his electoral campaign back in 2008. The only question is, do you qualify for a tax-free retirement account? A TFRA account is not available just to the super rich. However, an account like this can only be technically set up if you or your family qualify for it. To discover if you qualify for a TFRA, request to be matched with an approved advisor in our network by using the button below.